Yeah, look, well, it'd be interesting to see how it plays out, Jim. But another big story this week, Trump summoned the head of the Federal Reserve, Jerome Powell, to the White House, told him it's a mistake to not lower interest rates. Do you think the president's right here? Does the Fed need to start cutting rates immediately to help the US economy?
Well, the Fed should cut rates because we're in danger of deflation. It's not going to help the U.S. economy very much. The Fed is kind of irrelevant. I understand I follow the meetings, I read the minutes, and I understand it's big news, and I get all that. But the Fed is kind of irrelevant. The money supply that matters is created by commercial banks, not by the Federal Reserve. But just to kind of put a little topspin on your story, and you're right about that, I was talking to some of the Trump transition team members, and they wanted to fire Jay Powell. This goes back, last December, before Trump was actually sworn in January. And I said, don't fire Jay Powell. There's a legal issue whether you can do it or not. But I said, don't fire him because the economy is probably going into a recession. And Jay Powell makes a very convenient punching bag, meaning when you go into a recession, just blame Jay Powell, blame him for everything, for not cutting rates sooner, not cutting them far enough, et cetera. If you fire him and replace him, then you own it. Then you're subject, you pick the replacement, so you're responsible for Federal Reserve policy. So I think the Trump team listened to that advice. They did not fire Jay Powell. And right now, it's working out the way I expected, which is he's going to get the blame for any U.S. recession.
Yeah, looking at your Twitter account, I see you visited Jekyll Island last month. And for viewers that don't know, it's the place where the US Federal Reserve was basically born in the early 1900s. So you don't think the Trump administration is now going to fire Powell? They're just going to leave him there as a punching bag and take all the hits until his term ends. I think it's next year.
That's correct. His term ends in early 2026. So we may be in and out of a recession between now and then. I expect we will be if it doesn't get worse, if it doesn't turn into a monetary crisis. But the point being, yes, his term ends, I believe, it's early 2026, I think February 2026. So what's the rush? Get through a bad patch, get through a recession, and then name a replacement early next year when things will probably be better.
Yeah, look, we're in Australia here, obviously. On the other side of the world, it's hard to get a sense of how things are going economically in the US. What's the vibe like right now? Does it feel like you are heading towards that recession?
Well, I don't think that's the vibe. That's my own analysis, and there are a lot of indicators that point to that. And cutting rates doesn't matter. By the way, low interest rates are associated with recession and depression. The idea that we'll cut interest rates and will stimulate the economy is nonsense. The lowest interest rates were after the 2008-2009 global financial crisis, and also during the Great Depression. I spoke to Ben Bernanke about this. Interest rates in the Great Depression were rock bottom. So interest rates are not stimulative. When your economy is going well and your real growth is, say, 3 or 4%, and a little bit of inflation on top of that, interest rates should be 5 or 6%. That means people are borrowing, they're lending, they're spending, they're investing, businesses are expanding. That kind of strong economy is associated with somewhat higher interest rates because there's a competition for funds. When you see interest rates below 2%, maybe even 1% or lower, and that's where they're headed right now, that's a sign of recession. But there are many other signs, without getting too technical, what they call swap spreads. Why would I take a lower interest rate from a bank than I can get from a federal U.S. Treasury security? Well, the answer is because the bank deal is off balance sheet. That shows you that bank balance sheets are constrained. They're reducing their balance sheets. And as I said earlier, the Fed puts on a good show, but it's just a show. The money that counts, that's loaned and spent and invested and drives the economy, doesn't come from the Fed. It comes from commercial banks. And right now they're pulling in their horns.
Just talking currencies, the US dollar, it's fallen to its lowest level since, I think, September last year. Meanwhile, you've got cryptocurrencies and gold really starting to gain quite a lot of value. Do you think the US dollar is losing its influence a bit as the world's reserve currency?
No, and you're right about the first thing. The dollar has gone down in value, but it was from a pretty high level, not the highest. The highest of all time was January 1985. That's when Baker had the Plaza Accord. But it has come down. It come down in the last several months. You're absolutely right about that. But that's from a fairly high level. So the dollar is still very strong. But that is a different metric than the status as a global reserve currency. And I explain to people, there's no such thing as a global reserve currency. When you have reserves, you don't hold them in currencies or cash, you hold them in securities. And so what it actually means is that countries have U.S. Treasury securities in their reserve positions. Now, yes, they're denominated in dollars, so you can say dollar for shorthand, but it's really Treasury securities. So when you ask yourself, will the dollar lose its status as the global reserve currency? What you're really asking is, will U.S. Treasury securities lose their status as the number one reserve asset? And the answer is no. And the reason is there is no alternative. There's no, the other biggest bond markets in the world are Japanese government bonds and Italian government bonds, and Germany's third. So if you don't like U.S. Treasuries, do you like JGBs better? Do you like Italian debt better? The answer is no. I mean, by the way, Italian and German debt is denominated in euros, but they're not backed by the full faith and credit of the European monetary zone. They're backed by whatever government, Italy or Germany. So A, those markets are not big. B, they're only as safe as the Bank of Italy or the Italian government. So U.S. Treasuries look very attractive relative to those. Even in a world where the dollar is going down in terms of exchange rates, the U.S. Treasury is not, Treasury securities market is not threatened as the leading global reserve asset, is the way I would put it.
And then, Jim, just finally, I saw you talking about this recently, artificial intelligence. I mean, how big a threat do you see AI to the global economy?
Well, I just wrote a new book on that. It just came out. In fact, I'll be in Australia later this summer, kind of on book tour. My book is called Money GPT, but it's the impact of artificial intelligence on capital markets, banking, and then there's a chapter on nuclear warfighting. And here's how I would put it, Ed. AI is extremely powerful. It's everywhere. It's in your refrigerator, telling you to change the water filter. It's on your car dashboard. AI is here to stay. It is very powerful, and it will do some wonderful things. It'll already has, I believe, cured some diseases or pointed the way to some cures. So I'm not an AI basher. What I'm doing, I'm warning that, yeah, AI is powerful and can do a lot of good, but there are also very significant dangers which are being overlooked. And my book is really about the danger, including how it could cause a stock market crash, how it could cause a run on the bank. Those things happen anyway, but AI can accelerate them, make them more likely, and then in the kill chain in nuclear warfighting, it could lead very directly to nuclear war. The reason is that AI, it's all math. I mean, it's not intelligent. You can forget the intelligence part. It's a lot of math. It's very fast. Requires a lot of energy, a lot of computing power, etc. But it's all math. But it's good at finding stuff. It doesn't create anything. It can find things, but it has no common sense.
Jim Rickards, best-selling author, economist, and former CIA advisor. Great to have you on the show. Thanks very much.
Thanks.